Hey traders, welcome back. This is going to be episode 3 of the market structure series. And in this episode, we will mainly be talking about higher time frame trends and how in fractal nature, for example, the 15-minute trend fits into the 4-hour and how you could likely take advantage of that and trade it correctly. So let's say in this example on the 4-hour, make this a bit bigger. Here on the 4-hour, we can see that we have pretty bearish structure. So moving to the downside, creating lows, highs, lower highs, and so on. Well, we are bearish. Then if we drop down a time frame, for example, to the 15 minutes, this is how this bit would look on the 15 minutes. So it's pretty clear that we have multiple types of trends within that. We have our bearish structure, which has quite a couple of legs. Then we have our temporary bullish structure, which is this part. Then we have our bearish structure again, this leg right here. And then we have another bit of bullish structure. Now, the idea is that you have to trade with the trend, right? Because that just gives you an edge. If you trade in the direction where the market is going, you have a higher likelihood of being rewarded for that. All right, so now we know how our minor structure is working. Now let's think about how we can enter a trade here with the knowledge that we have. We know that on the 4-hour, we are respecting all of our previous highs. So we are in a clear bearish trend. And now we know that in minor structure, we are actually in a bullish trend. Okay, so what did we learn? We learned that we can identify trend weakness by a change of character. So let's do that. Where do we have our change of character? We have it right here. Boom. Let's mark that out. We changed character here because we violated one of those lows. All right, pretty good. So we violate it. We then go back up. And now this is the thing, you're going to need a concept to enter from. You're going to need a trading plan to execute your trade. For example, I am a smart money concept trader. So I would be entering in supply zones at this point. And if it's a bullish trade I want to catch, I would enter from demand zones. But you could also be a retail trader and enter from, let's say, an engulfing candle or a pin bar. So let's assume that either one of those things is right at this point. So we take a step short there. We set our stop to the previous high. And we then set our risk to reward at a level that we like, or just at a total R that we like. And we know, of course, if we look at this drawing, the price is going to drive down. And at this point, you actually have established an edge, because trading with the trend automatically gives you an edge. If you trade pro market, you're always going to have an edge. If you trade counter market, you're always going to lose, right? There's a big likelihood that you're going to lose. So right here, we see that the trend is changing. We know that right here, that's probably the top of that trend, of that bullish trend. So we try to catch a trade there. And there's also a very, very nice tool to identify if you're buying at a decent zone or a bad zone. So I use the FIB tool for that. I hope the lines are clear. Let me just draw out that middle line so you can see it. 1 second. Let me actually use the GAN box. All right, so what we see here, the gray area, which is basically below 50%, that's a discount area. So if you buy there, you would be buying at a discount compared to the rest of the range that we created. And if you buy in this top area, so in the green area right here, then you would be buying at a premium or selling at a premium. So basically what we say is trades, we are allowing ourselves to take buys in the gray area. We are allowing ourselves to take sells in the green area. This by itself, again, gives you another edge, because you're only selling when price is high and only buying when price is low. That gives you another edge. So you now trade pro market. You have a concept that you enter from, and you buy at discounted areas and you sell at premium areas. All of that already gives you a really, really nice edge. That's basically it for the concept of minor structure. So always know if you're looking at a 4-hour trend that there is 15-minute fractal structure within that. minor structure, learn to identify the structure, then try to add the break of structures and the change of characters onto that. And then you've already developed an edge. If you want to learn more about the concepts of smart money concepts that I will be teaching on this channel, make sure to be subscribed and turn on the bell notification because you really do not want to miss this. What I'm going to cover, I'm going to give you an edge that you cannot believe. Cool, that was it for this video. If you liked this series, make sure to leave a like. If you didn't, leave a comment and just tell me what you didn't like about it so I can improve. Cool guys, have fun trading, have a nice day, and catch you later.